Let's discuss the dynamics of Indian retail sector. News flow is indeed dominating that space. To discuss that, how things are shaping for the retail sector and what's the way forward, we are now joined by Mr. Govind Shrikhande, Managing Director of Shoppers Stop, and along with Govind, we have Mr. A.K. Prabhakar, Senior Vice President of Equity Research with Anand Rathi Financial Services. Govind, Mr. Prabhakar, gentlemen, good morning. Thank you for joining us. Govind, first, let's start the discussion with your numbers.
Right.
Can I just interrupt you there, Govind, because Bharti numbers have also come out, and Q4 PAT is at 1,000 crore. I don't know whether these are consolidated numbers. So, you know, the rule for Bharti is that you never ever react to the first flash. These are just base numbers. Q4 PAT is at 1,000 crore. We'll wait for some more numbers to trickle in. The immediate reaction is, actually there is no reaction. 309, Bharti, nothing much has changed. Q4 PAT for Bharti is that 1,000. It's too early for us to comment whether these are consolidated numbers or numbers are above estimates or below estimates. Govind, if I look at what Shoppers Stop has reported for the quarter gone by, I'm sure you're not happy with the numbers. Revenue is up 26%, but profits, show me the growth, down 87%.
I think you're reading too much in the consolidated numbers, and I think I have been stressing it again and again that there are two stories within the Shoppers Stop business. The Shoppers Stop Limited story, which is a continuing story of the department store, and the consolidated is the story of the addition of Hypercity. And we have maintained that Hypercity is tracking well, is moving towards its profitability, but it's still about 24 to 30 months away. But talking on the limited space, I think, yes, one can say that one is unhappy about the result. I won't say that. I'm still very, very positive, because I think this 1 year has been pretty definitive for our company. We added almost the highest ever store numbers that we have ever done in our entire 21 years of span. We added almost 25% more space in this year, opening 13 department stores, 8 home stop. Number 2, we also hit the milestone number of 50 stores as well, plus 2.5 million First Citizen members, plus 2 million Facebook fans. And I think this quarter, one of the best features has been volume growth has come back. We have seen a like-to-like growth of 10% this quarter in the department store space, with 1% coming back in volume. So I'm pretty positive about the entire sector, and we have been maintaining that this sector will see a lot of consolidation in the 24 months space, and we are already seeing some of that happening already in the last weekend.
Talk a little bit more about Hypercity, because that has been scaling down their store rollouts for FY13, because they're looking to roll out only 2 hypermarkets now in Mumbai this fiscal. Why the scale down, and when do you expect the break even to happen?
Okay, 2 parts. I would say we have basically decided 3 milestones for Hypercity. Definitely one of the milestones is increasing the gross margin. And 2 quarters we have seen the margins growing up. We are up by 130 basis points. Number 2, we want to increase our apparel share in this business. That's also up by about 50 basis points. But it has to actually hit about double digit, 12% of share in the overall mix. Third, definitely is the milestone of hitting PAT profitability. So our target definitely is try and hit EBITDA profitability in the coming year and try PAT profitability over the next 30 months period. So I think we are tracking well there, and rather than adding stores and increasing pressure on you to hit profitability, we have decided to go a little slower and target profitability earlier than what anyone else would do.
But are you committed to run the hypermarket business, or given the kind of M&A activity it is happening and how dynamics for the retail sector are moving, it makes little commercial sense for Shoppers Stop to run the hypermarket business?
No, I think when we entered hypermarket, the clarity was that this is the biggest market segment in the retail market, and food constitutes almost 60-62% of Indian consumers buy. So if you want to be a retail player, you need to be there. Yes, there are definitely big challenges in terms of profitability in this segment, and yes, we are very proud to say that we are more profitable or less loss-making than anyone else in the market today. That doesn't give us a consolation. The consolation or the prize really would be to make the format profitable, and I think we are on the target path of that. What can happen post FDI opening up? I think we are still committed to this business, and yes, we want to continue in this business, growing and adding strength.
A.K. Prabhakar, even though we have the management of Shoppers Stop with us, I want to start by asking you a question on Pantaloon Retail. The fact that they have hived off their branded retail business to AV Builder Novo, that's great news for them. They will get 1,600 crore, that will reduce the debt, and brokerages are of the view that earnings need to be upgraded. If the story is so simple, why is the stock, or why has the stock corrected today?
I don't think it is so simple. Now they have sold off their profitable business and the other business are not doing so well. So I think it shows that Pantaloon as a group, they are desperate to hive off that business to reduce their debt. So that is the only reason, because they have been waiting for this FDI in retail and it has not come. Maybe post 7th May we will get some clarity on it. But till that doesn't come, somebody who has been waiting for a long time for FDI in retail and holding on to the debt, it was very painful. Now they thought, okay, now come what may, we will try to reduce some debt and do some restructuring in business. And it is a very good benefit for AB Novo, which is there in the business already, which will double their sales as well as their market share going forward. Textile retail has done very well if you take specific companies. For example, Arvind, Raymond, they have done very well. When you have FMCG together or lifestyle together, there is some bleeding in that. So I think this makes sense for AB Novo to take over Pantaloon Retail, mainly textile segment.
So how would you map up, Mr. Prabhakar, the valuation of AB Novo now, and how much more headroom do you see in the stock price from the current levels, considering the value that the Pantaloon retail segment would bring about for AB Novo as a company?
AB Novo has more than 30 businesses altogether, so textile is a small part of their business. But already we have a target of 1,300 for Aditya Birla Novo, and we still maintain the target. And this deal, still there is more clarity to come, so we are waiting for more clarity. Once the clarity comes, then we will upgrade Aditya Birla Novo. And we have a very high target for Raymond's also, which is in the same business, and Arvind also, where we like in textile retail.
Govind, that is precisely my point. Does it make commercial sense for Shoppers Stop to be present in Hypercity? It's a low margin business.
Right.
You're selling fruit, vegetables and groceries in that business. You don't have pricing power because FMCG companies don't give you any margins. What is the commercial sense in running that business?
I think, as I mentioned earlier, that this is a segment that gives the maximum market share. And if you look at the largest players across the globe, they are hypermarket players or supermarket players. So one is definitely learning the ropes of the trade and trying to understand what will make better margins. I think having turned looked at this business for about 5 years now, we now understand what really makes sense in terms of shares within that segment, whether it's apparel, general merchandise or food and grocery. So I think we are on the track of ensuring that there is a profitable mix in the business, and that's what we are targeting for. So basically, if you want to be one of the bigger players in the market, you have to be in the hypermarket segment.
Are you open to a foreign partner or a domestic partner in Hypercity? Do you need one?
We don't need one. I think one of the big things that is differentiating us from everyone in the market is, if you look at even within this financial year, we have generated 101 crore of cash. Our debt is very, very much under control, under 0.4. And not only that, our trading model has been very, very successful. 60% of our stock is non-bought out. So what really distinguishes us from everyone else in the market is the kind of model that we have approached this whole business with, and the kind of profitability that we are still seeing in the department store business. Hypermarket, yes, definitely we will be willing to look at a partnership once the FDI rules are clear.
And what about other retail formats, Govind? Apart from merchandise, apparel, you also have presence in the book retail segment.
Correct.
At a time when e-books is the new fashionable word, does it make sense to run such big bookstores?
No, luckily we are not running large bookstores. We are running average size about 1,800 to 2,000. And in fact, the whole strategy in Crossword now onwards is not only to sell books, but also to sell gifting items, toys, etc. and to go through more franchisee stores. We definitely are seeing some headwinds because of the .com attack on the bookstores, definitely. But yes, this space will also go through some consolidation.
So you're not looking at shutting down your book retail business?
No, definitely not.
How much money are you making in that business?
Small. Which is? Really small. The business itself is small. The overall books business in India, if you know, is just about 1,000 crore. It's not a very large size business.